Is Nvidia, ticker NVDA, a buy right now, or should you wait? None of this is financial advice. I am showing you what the scanner found. Your money, your call. Over the next few minutes, I'll walk you through everything: the business, the chart, the fundamentals, what Wall Street thinks, and where the trade goes wrong. These are swing trade setups, roughly 15 to 30-day holds. Let's get into it. First, the business. If you can't explain what a company does, you have no business trading it. So, what is Nvidia? In plain terms, Oration operates as a data center scale AI infrastructure company in the United States, Taiwan, China, Hong Kong, Europe, and internationally. It's a technology company and worth about 4.8 trillion. To put that in context, that puts it among the largest companies in the market, a megacap, which usually means steadier moves and deep liquidity. With the business covered, let's look at what the price action is telling us. Let's read the price action. The technicals tell us about timing. Here's what they're saying right now. So, moving averages first. The 50-day shows you the recent trend. The 200-day shows you the bigger one. Where price sits relative to these tells you a lot. Right now, Nvidia is trading about 6% below its 50-day and 4% above its 200-day. So, momentum has cooled and the trend is in question. On momentum, RSI measures how fast the stock has been moving. Above 70 means it's stretched, below 30 means it's been beaten down. Here, it's a neutral 47, neither stretched nor washed out, which is a healthy place to enter from. It's about 16% below its 52-week high, close enough that there's room to run back toward the highs. Now the fundamentals, because the business behind the chart is what makes a move stick. Is it growing, and is it cheap or pricey? On growth, earnings are growing fast, more than doubling from a year ago, and revenue is up about 85%. Growth is the engine. A stock can have a great chart, but without earnings behind it, the move has no foundation. Valuation check. The market is pricing this at roughly 16 times next year's expected earnings. Reasonable territory. The market isn't pricing in miracles or disasters. Time to check the street. What are analysts saying and what's coming up? 58 analysts cover this stock, and the consensus is a strong buy. Analyst ratings aren't gospel. They tend to lag the move, and they almost never say sell. But a wall of buy ratings does remove one obstacle. The earnings calendar is clear for the next few weeks, so this trade gets to play out on technicals and trend, not on a surprise number. If you are finding this helpful, hitting like actually makes a difference. It is how YouTube decides who else sees this. Now, the most important part, the downside. Where is Nvidia wrong? Let's start with the risk because that's what you manage. Keep an eye on the 200-day moving average. Losing that level would mean the long-term trend is no longer on your side. On the flip side, if support holds and the trend continues, higher prices are the path of least resistance. That's the move you're positioning for. My rule: plan the exit first, keep the position small enough that you can be wrong without pain, and cut it if the level breaks. That's what keeps you in the game long term. Every stock has two sides, so let's do both: the bull case and the bear case for Nvidia. First, the bull case: what's working? Earnings growing fast, revenue up 85%, Wall Street agrees, 58 analysts rate it a buy, reasonable valuation at 16 times forward earnings. But here's the bear case: the risks. No setup is risk-free. Always size for the unexpected. Every trade has two sides. The edge comes from knowing both before you put money on the line. Here's the live scanner output on NVDA. A 60 out of 100 composite score, currently rated watch. What's driving the score? Long-term uptrend confirmed above the 200-day 190.82. RSI in the healthy momentum zone, 45. Not overbought. Beat earnings last quarter by 6%. EPS growing 214% year over year. What's working against it? Not beating its own sector over the same window. 15.4% below the 52-week high. Lacks full leadership yet. Market regime is risk-off. Capping new buy signals across the board. Even strong names like this one. That's the full data behind the score. Not an opinion, just the numbers. Here is my honest take on Nvidia. My scanner rates this 60 out of 100. That puts it in the watch zone, not a full buy signal. The short-term trend is not fully aligned yet. It is below its 21-day and 50-day moving averages, which tells me momentum has cooled. My scanner has standards, and right now NVDA is not clearing all of them. But here is what makes this situation interesting. The fundamentals on Nvidia are genuinely exceptional. Earnings growing over 214% year over year, and 58 Wall Street analysts rate it a buy. That kind of growth does not show up in weak companies. And it is currently trading 16% off its 52-week high. You are not chasing, you are buying a pullback in a fundamentally strong name. So, here's how I would approach it with controlled risk. A starter position, no more than 20% of my normal allocation, right here. If it pulls back to around $192, I add a second tranche to bring my average cost down. And if it breaks below 190 yuan, I am out. No exceptions, no hoping. That level is where the long-term trend breaks down. And when that happens, you step aside and reassess. The scanner says, wait for a cleaner setup. I respect that discipline. It is what keeps the win rate high. But with fundamentals this strong, I am willing to take a small risk-defined position and let the trade prove itself. If this breakdown helped, hit subscribe. Tomorrow, I am previewing this week's scanner scorecard. Did the picks deliver? Subscribe to find out. As always, do your own homework, manage your risk, and never bet more than you can afford to be wrong on.